It's been 2 hours. The chart in front of you has gone almost completely still. A narrow range, thin volume, candles that barely have bodies. Nothing on your checklist has printed. Not one thing. And yet your hand is still on the mouse. Your eyes are still moving. And somewhere in the last 20 minutes, you stopped looking for a setup and started looking for a reason. Here's what makes this one different from everything we've trained so far. There's no spike of fear here. No anger, no adrenaline. If you read your gauge right now, it would probably say a 2. You feel calm. You feel patient even. And that's exactly the disguise. Because boredom doesn't arrive as pressure. It arrives as permission. A quiet little voice that says, well, this is close enough. Today we train the skill that keeps you out of that trade. Patience in dead, low-quality markets. Not patience as a personality trait, patience as a drill, with a letter, a timer, and a score. Because an empty market will take your money just as fast as a violent one. It just does it more politely. Welcome back to the ComLucro channel. This is workout number 9 of your Psychology Mindset workout series, and it's the one I promised you at the end of the last session. Staying patient when the market gives you nothing at all. The drill is called the 20-minute grade, and by the end of this video, you'll grade the market the same way you already grade yourself. And notice the shift, because it matters. Everything we've trained so far handles too much feeling. The 4-2-6 interrupt stops you at the moment of the click. The 7-3 reset rebuilds you after full activation. The 60-second sweep clears the residue between trades. All of those fire when the number goes up. Boredom is the opposite problem. The number goes down, nothing feels wrong, and you trade anyway. And doing nothing is genuinely harder than it sounds. In 2014, Timothy Wilson and his colleagues published a set of studies in Science under a title that says it all: Just Think, the Challenges of the Disengaged Mind. Left alone in a room with nothing to do, a striking number of participants chose to give themselves a mild electric shock rather than sit quietly with their own thoughts. Not because the shock was pleasant, because doing something felt better than doing nothing. There's a second half to this that most traders never hear. Back in 1908, Yerkes and Dodson described a curve where performance climbs with activation up to a point, and then falls. And that curve came from lab animals learning a task, so we borrowed the shape, not the science fiction built on top of it. But the shape is the lesson. It falls at both ends. Too activated, and you're reckless. Too flat, and you're sloppy. A dead market parks you at the low end and calls it calm. So, if this kind of content helps you, take a second to like the video, subscribe, and turn on notifications so the next lessons reach you the moment they go live. And feel free to share in the comments which topics you would like us to explore in future videos. And if you want to support the channel on a deeper level, consider becoming a member to unlock exclusive content and help keep these lessons coming. You'll also find links to our trusted partners in the description below. Using them costs you nothing, and it directly helps the channel keep producing free educational content like this. So here's your drill. It's called the 20-minute grade. 5 moves run every time the market stops offering you anything. And the law of this workout is 4 words long. No grade, no trade. If you can't say out loud what grade this market just earned, you have no business clicking anything. Move 1. Grade the market, not yourself. 1 letter said out loud. An A means your setup is there, at your level right now. A B means it's building. 1 condition still missing. A C means there's nothing here. The market is moving, but not for you. Most quiet sessions are a long line of Cs. And a C isn't a failure, it's information you just handed yourself. Move 2. Give the C a timer. 20 minutes on the clock. And for those 20 minutes, this market isn't a candidate. It's weather. That timer does one specific job. It answers the "but what if I miss it" argument before it starts. You're not walking away from the market. You're giving it 20 minutes to earn your attention back. Move 3. Hands off and go up. Hands off the mouse, chair back a few inches, and if you're going to look at anything, look at a higher time frame. Boredom lives on the 1-minute chart. Zoom in far enough and any market looks busy. That's not analysis. That's your eyes manufacturing work. One time frame up, those same 2 hours look like exactly what they are. Flat. Move 4. Name the price that changes the grade. One written line. This becomes a B if price closes back above yesterday's high. Peter Gollwitzer's research on implementation intentions, published in American Psychologist in 1999, found that plans shaped as if X happens, then I do Y, get carried out far more often than a general intention to behave well. He wasn't studying traders. It's the form we're borrowing. Waiting for nothing is torture. Waiting for a named level is a job. Move 5. Score the weight. When the timer rings, regrade the market and mark one tally for the C you honored. That's the move almost nobody makes. A weight executed correctly is a repetition, exactly like a trade executed correctly. If your scoreboard only counts trades taken, the only way to score is to trade, and your own scoreboard is working against you. Then you just run the loop. Grade, timer, hands off, named level, tally, for as long as the market stays empty. And if the whole day never grades higher than a C, that was still a complete session. Mark Douglas built Trading in the Zone around the idea that your edge only shows up across a series of trades that actually meet your criteria. A trade taken outside those criteria doesn't just cost you money, it isn't even part of the series you're measuring. Imagine a quiet afternoon in the middle of August. Price has spent 2 hours inside a 12-tick box. Volume is a third of normal, and you know it. So you start drawing. A trend line across 3 touches you'd never trade. A tiny channel on the 1 minute. And there it is, a setup, built by you, out of boredom, in a market that has offered nothing all day. 10 minutes later, the noise takes your stop. And the honest name for what happened isn't a bad trade. It's a manufactured one. Now, the other version, and this one catches good traders. You blocked 4 hours for this session. Cleared the calendar, told the family, made the coffee, and the market handed you a C for 4 straight hours. Now the pressure isn't coming from the chart. It's coming from the chair. You're not trying to make money anymore. You're trying to justify the afternoon. But those 4 hours are already spent. Gone, whether you trade or not. The only question still open is whether you pay for them twice. Let me be honest about the limits of this drill. It doesn't turn a dead market into a tradable one. Nothing does. And it isn't teaching you what an A actually looks like. That's your method, and it lives in our courses on market structure, smart money concepts, and technical analysis. The grade only works if your criteria are already written down. This workout doesn't build the criteria. It builds the discipline to obey them when you're bored. So here's your exercise for this week, and it's simple. For your next 5 sessions, run the 20-minute grade every time the market goes quiet. At the end of each session, write 2 numbers side by side, C's declared and C's honored. Nothing else. Your target is the same boring, beautiful target as always. The same number twice, 5 sessions in a row. Because the trader you're building isn't the one who's always in the market. It's the one who can sit in front of an empty screen for 2 hours and still be there, sharp and unspent, when the A finally prints. No grade, no trade. And in the next workout, we go somewhere harder. What happens after a real loss? How you recover and how you rebuild confidence without pretending it didn't hurt. Stay focused, keep training, and I'll see you in the next workout. So, trader, if this video brought you more clarity, like it, subscribe, and turn on notifications so the next lessons reach you. And tell me in the comments what you want me to cover next. And if you want to go deeper, you can become a member of the ComLucro trader community right here on YouTube. It unlocks exclusive content, early access, and extra tools for your development, while directly supporting the channel. You'll also find our trusted partners linked in the description. Using those links costs you nothing and helps us keep producing this kind of educational content. And remember, the mission of the ComLucro channel is simple. We help traders build clarity, confidence, and structure, so every decision is made with discipline and intention. Here you'll find complete courses built as a true trading masterclass. Liquidity, market structure, higher time frame analysis, and supply and demand. Always focused on reading price and executing with a professional mindset. We also cover trading psychology, risk management, and long-term consistency. Because trading isn't just about charts, it's about mindset, discipline, and execution over time. Our main courses include smart money concepts, ICT, technical analysis, trading psychology, and Wyckoff. Alongside that, we share insights from respected traders whose work helps you understand how markets really behave. Thanks for watching, and I'll see you in the next video.